If it's Monday, that means it's set up Monday. Originally, I wanted it to be set up Sunday, but even when it's Sunday here, it's Monday in New Zealand. So technically for them, it's set up Tuesday. You see how confusing this gets? So the setup this week, much like the prior 2 weeks, is going to be focused on BTC and ETH because the signals are so clean, pure, crisp, fresh glacial mountain water like. These signals don't have to happen often, which is why when I see them, I talk about them a lot everywhere I can because they are typically extremely profitable signals. They are slow. I'll show how often this signal has happened on BTC. What I'm referring to is what's called a bullish TK recross above the cloud. This specific signal right here. So if you don't know what this colorful red and green blob is, it's known as the Ichimoku cloud. The settings I use are 20, 60, 120, 30. Not going to go into why I do that on this video, but by increasing the settings beyond default, it allows me to take in more data, bigger data capture, better signals, less noise, more confidence in my signals. That's really the biggest thing. So if we look at BTC, we look at ETH, just if you know nothing about the cloud, just look at where price is relative to the blob, right? BTC clearly leading here, giving you a preview for potentially what is to come for Ethereum. Being 1 and 2 in market cap, high caps, they generally are pretty correlated. In a bull market, less so, but correlated enough to where if BTC moves first or if ETH moves first, there's a high expectation that the other will follow. So we can see that BTC is probably a week or less, maybe 3 to 7 days ahead of Ethereum in that it's already had its bullish TK recross above the cloud. It's already above the red line, which is the Kijun. So there's shades of bullishness here as this progresses along. In this specific case, is the price above cloud? Yes, for BTC. Is it above the Kijun? Yes. Does it have a bullish TK recross? Yes. So we're still waiting for that for Ethereum. But again, the expectation is this will happen sooner rather than later in the very near term, within the next week, I'd imagine. The second expectation for this trade is you will see higher highs beyond previous local highs. We can look no further than the most recent bullish TK recross above the cloud for BTC, which was a few months ago. When you see these signals, it means price is ready for bullish continuation. So for BTC specifically, we had the Kumo breakout, price got above the cloud, had this nice up move, consolidated. It makes a decision. Is the bull trend over? Is the trend bearish now? Are bulls exhausted? That's what's being decided here. Is this a reaccumulation? Is it a distribution? In this specific case, the signal was late-ish because it sort of happened after the breakout happened. You can watch other indicators to hone in on this, like Bollinger Bands, which tell you how sideways we are, the likelihood of a breakout one direction or the other. But typically the cloud signals go together. Now we didn't get the bullish TK recross of the cloud here because it was so bullish already. You did get a series of inverted head and shoulders before the breakout. Right here, we're just seeing a mess. Like there was like a case for W double bottom. There was a case for an inverted head and shoulders. There's really nothing here. It's just kind of all over the place. But the expectation is this will follow BTC. And if we look at BTC, if we look at back to 2012, okay, all of the instances of a bullish TK recross above the cloud, there's been 12 of them. And another way to quantify this is, let's stick on some EMA. Let's look at the 20-week EMA. How many times has price led to bullish continuation after a bullish TK recross above the cloud? And to quantify that, we're just going to say, has it led to continuation above the 20-week EMA or the 140-day EMA? So all but one of those times has led to bullish continuation, and that was January 2014, which it's clearly a failure, but related to Mt. Gox, if anything, as well. So there's a little bit of situational stuff happening here. So to me, this says, okay, for the most part, this is very cut and dry. When you're talking about 90% signal, 91%, anything above 50-50, that's good enough for me. So this signal historically has been very, very bullish for BTC, which is again why the expectation for Ethereum is this will continue. This is the time to watch Ethereum. If you're not positioned in Ethereum, it's time to think about a position for Ethereum, that sort of thing. And back to BTC real quick, if we're talking about stop losses, that's usually the next question, right? Entry, exit, stop loss. So what is a good stop loss for this position if you're in it? I like to turn on fractals. Williams fractals is how you look them up on TradingView. And when you get a high, low, high, you're going to print a bear fractal. When you get a low, high, low, you'll print a bull fractal. And the idea is as price keeps moseying along the trend, you'll get successive fractal prints. Right now, this fractal's at 11.2, which may or may not be below your entry. That's sort of irrelevant. That's the stop loss for this current situation. This fractal should continue to move up, which is known as a trailing stop loss, which is another reason fractals are so good. It's automatic, it's trailing, it's slightly lagging because you need the candles to print in order for the fractal to print. But for the most part, fractals are quick enough to where you're not going to get bulldozed because your trailing stop loss is too low. If we look at the most previous example here, EMAs flipped. This is alligator, just three EMAs, 5, 8, 13. EMAs flipped, price went above EMAs, price went above previous bull fractal. Okay, game on. Then we get these successive prints, stop loss here, stop loss here, stop loss here, boom, stopped out. You're stopped out before any of the madness happens. And then back to ETH. Again, if we sort of project where we think price may go, we being me, beyond the higher high, you can use fib extensions. I like Pitchfork. I think price will want to live potentially above the $500 range. If things get real loony, we're talking 4 digits by the end of the year, which is going to be quite something. Not a promise, but a possibility. Something to watch for. It clearly depends on a lot of factors, right? But we're talking about the beginning of a bullish trend, the beginning of bullish continuation. So you want to be realistic, but you also want to think, where could this go based on rate of change of this? Like we're talking almost 2 years now, price rate of change based on this pitchfork, which looks pretty valid to me because price is hugging median line, price is hugging certain trend channels, it's bouncing where it should bounce, etc. So we're looking at higher highs, which is above 500 for sure. And then for BTC, again, being realistic, I'm thinking median line, which is at this point close to an all-time high. But thus far, price has really lived in the bottom half of this. When price begins to live above the median line, then it's kind of a completely different animal. So to me, the price is almost irrelevant. It's more about where it sits in the rate of change. This pitchfork may or may not be valid. I'm not a pitchfork expert. I just like using pitchforks. But the setup for this ETH trade is just smacking you in the face, just like it was for this BTC setup. And one last thing I noticed about ETH, if we look at the active addresses and the transaction counts over the past couple weeks, active addresses are skyrocketing again. Transaction counts have been highly volatile, but are again increasing dramatically. So when I see on-chain metrics perking up without price reacting to that, I consider it a bullish divergence. So there's clearly something's off, right? Like when you see this massive spike in active addresses, you expect a reaction from price because that's just more people entering into Ethereum, more people buying Ethereum, using Ethereum. You can also look at the transaction fees, which I'm sure are increasing again. So all of this should be bullish for Ethereum. I mean, active addresses are almost back pushing all-time highs again. Just we're still at 380. It's just kind of crazy, right? Like you think to yourself, all right, there's this setup on the technicals. There's clearly fundamental evidence, on-chain evidence, that this looks pretty good. So that's why it's this week's setup of the week. Watch out for it. Watch for higher highs. If this thing can clear 395, 400, it's game over for the bears. It really is. There's upside is 500 plus at that point. So stay safe out there. Use smart stop losses, trailing stops with fractals, and happy trading.